Hi, good afternoon, everyone. Welcome back to the channel. We are once again joined by Rhind of GraniteShares. Will, thank you so much for coming back on.
Thank you so much for having me. Good to be back on.
Absolutely. So we have a couple of new funds for YieldBoost that we'd like to talk about. Do you want to go ahead and tell us a little bit about the new 2 days ago MTYY and PLYY?
Yeah, no, absolutely. So these, in
Yeah.
some respects, have been the most requested ones. So MTYY is the MSTR or MicroStrategy Strategy B, whatever you prefer to call them, YieldBoost Fund. And then you have the Palantir, YieldBoost Palantir, which is PLYY. So both of those have been sort of hotly anticipated and actually follow up on a couple of launches that we did just a couple of weeks ago, Amy and AZ. So AMYY and AZYY of AMDL and Amazon. So these are obviously in the true yield boost way. These are underlying leveraged ETFs, like leveraged single stock ETFs, and we are selling options on those leveraged ETFs to generate those yields.
Nice. Now, the Tesla one that's been out for some time now. Seems like it's been, having some like what they refer to as NAV erosion, like a lot of the other high yield funds. Can you speak to that?
Yeah, sure. I mean, in a way, right, this is a sort of a bit of a misleading concept because the majority of what people refer to, I think, when they talk about NAV erosion is just that the underlying goes down. And that's really been the case of Tesla for the majority of this year, up until the rally that happened over the last few weeks. So, when the underlying goes down, if you're in a covered call strategy, you get 100% exposure typically to the underlying. What's different about Yield Boost is that we actually buy put options as well. So you get some downside protection. But for the majority of it, when you have an underlying that's going down, it's just because you're exposed to the price action of the underlying asset up and down.
Yes. And that's certainly, I think, compared to Yield Max and others, the fact that you're doing like a put strategy definitely helps.
Yeah, and if you look at clearly the performance of some of the other yield boosts, you can see where the underlying has done well, the performance is really good, and where you have an underlying that goes down, then clearly you have some exposure to the downside.
So it looks like your biggest one in terms of assets under management is the AMYY. I'm looking here. Actually, no. I'm trying
It
to
should be
sort it.
Tesla, TSYY.
Yeah, TSYY.
Yeah.
Um,
Yeah, which is a little bit misleading also because that's our oldest one. So don't read too much into that. But it's
right.
very highly traded and there's a lot of interest in it. But it was also launched in December, whereas that's now getting on for a good 9 months or 10 months, depending on the exact date, worth of history that some of the other funds don't have.
Now, Tesla recently did have a run up. So are you able to capture like more of the upside when there is a run up in the underlying?
Well, yeah, but you capture the upside to the point of the distribution. So you can't capture more upside than the distribution.
Right.
So when you pay that weekly distribution, then that is the capped upside, if you will. But you're exposed to the movement in the underlying price within that range. And then to the extent that we capture that distribution, we obviously use some of that to buy puts. To the extent there's any residual, we put that or can reinvest that back into the fund. That will also help the NAV appreciate. But in the main, the proposition with these funds, not just yield boost, but covered calls as well, is you're effectively converting that growth, if you want to look at it like that, into income and giving that weekly massive distributions.
Right. So I'm doing a comparison here for the audience. So yeah, total return. So year to date, yeah, we're still a little bit behind the underlying, but it's obviously better in terms of total return.
Yep. Well, you also just had that massive run in Tesla over the last few weeks.
Right.
So before that, obviously you had an outperformance of YieldBoost where you're getting less volatility, absolute realized volatility than Tesla, but you're clipping, a big distribution every week.
Hmm. So let's talk about a little bit more about MTYY and PLYY. So those are obviously two of the most popular,
We hope.
underlying stocks. Yeah. So, yeah, I mean, Palantir, the underlying's just been on a tear, and you also have your leveraged fund too.
Correct.
Yeah, PT.
PTIR.
Yeah.
PTIR is the 2 times Palantir from
Uh-huh.
GraniteShares. So it's the leading product in the market.
Yeah.
And so that's the backbone of the YieldBoost Palantir.
Yeah. I don't know if you guys watch my videos at all, but I actually trade most of my options on GraniteShares ETFs.
Really?
Yeah, it's been going very successfully.
Good.
Yeah, the leveraged ETFs, I love them. The 2x and the 1.5x.
Hey, I'm
Yeah.
glad you said that because that's exactly, that's the whole proposition behind YieldBoost. That's why we did it, because with so many customers doing that.
Yeah.
And then we have people that asked for a packaged version of it to say, look, I want to trade options, but can you make the options even better? And by doing that with the European Flex options or bespoke, putting back, that is what YieldBoost is. So,
Oh yeah, with the 5x and the 3x that we don't have over here.
yeah.
Yeah. That's really interesting. So can you speak to that? So you're actually trading the European options on those too?
Yeah, it's just a bespoke, more flexible options contract than a US
Yeah.
listed option. So it just means that if you are an individual investor such as yourself and you are trading options on the GraniteShares levered single stock ETFs,
Hmm.
you can't replicate exactly what we're doing in YieldBoost. So it just means that from a YieldBoost perspective, although the payoff is sort of similar, you can't replicate it yourself.
Yeah, that makes sense. That'll probably be my next step, is to get into some YieldBoost. So, because I mean, one of my favorites, you've got NVDL, AMDL, really all of them.
Yep, as many as we can, that obviously people are asking for, and a lot of them are AI sort of stocks or crypto stocks have been really popular in the market. So that's where a lot of the investors want to be.
Yeah. Now, do you see? Do you guys have one for SMCI yet, or because I know Defiance does?
We do not
Yeah.
yet.
Are there plans for one of those?
Yeah, so we just made another filing. We have one filing that we put out, which was part of the original YieldBoost prospectus. So we're still launching from there. We had a new one, which is where MTYY and PLYY have come from. And so we have more on there that we'll be bringing out. So I think for us right now, we know the demand is there. It's just about making sure that internally we resource everything correctly. But yeah, MTYY and PLYY started very strongly, trading first day, a lot of interest.
Yeah, for sure. And I know with SMCI, there's a lot of volatility. And
yep, SMCI,
yeah.
There's a bunch of other good ones out there where you have a lot of volatility.
But yes, some of these, I mean, you guys have a lot of the leveraged ETFs. I see some short ones also.
Yep. Yeah, we're I think I'm right in saying that we're the market leader in terms of the number of products in the space. So we've got the vast majority of the big leveraged single stock exposures covered. So whether it's TSLR on Tesla, TSDD short Tesla, or NVDL, NVIDIA, or NVD short, Palantir, AMDLs or AMDs being amazing the last few months. Yeah, a lot of interest in Mara was a big one. Micron, loads of good names.
Yeah. Oh, you do have an SMCI one.
Yes.
SMCL. Yeah.
Yes. Yeah, just not a YieldBoost version.
Yeah, but there's one.
Yeah, we have yes, we have SMCI. We have a lot of the major stocks. I think that people would want a YieldBoost version of. So currently working on that.
Awesome. Now, can you explain the different expense ratios for, like, some of them you've got at 1.5%, some are only like
Ah,
0.99. Yeah.
some of those could be a typo in term, or not a typo, but the way that the gross or the net expense ratio is given.
Hmm.
But also some of them are just smaller names, and so the idea being that the market share we could reasonably attempt or reasonably expect to deliver is just a lot smaller. So, like for example, NVDL maybe is a bit of an outlier in terms of that's a multi-billion-dollar fund.
Yeah.
All these funds are like 50 or 100 million, which make them very viable for an ETF. But
Hmm.
it just means that in order to keep bringing those out, the amount of money that we actually make is not that much.
Hmm.
So we charge, the idea would be to charge more for a fund where we're not going to, or we don't think there's going to be like a huge amount of AUM gathered.
Yes, I see. Okay. Now, we have had some questions about like the daily reset from the audience. Could you just kind of run through in simple terms for
Sure.
them what that is?
Yeah, so this is
Yeah.
we got to make sure we're talking about, everyone knows what we're talking about. So we're talking about now leveraged
Yes.
ETFs more broadly,
Hmm.
like leveraged single stocks specifically to Granite Shares and to others. So they all work in the same way, which is think of them as being constant leverage, and constant leverage means that no matter if you buy today or 6 months from now or 2 days from now, you get the stated leverage factor over a given day. So if it's 2 times, it's 2 times the daily return. So in order to do that, you have to then re-hedge the portfolio or rebalance the portfolio at the end of every day in order to reset the leverage for the next trading day. Because if you don't do that, then you get leverage drift, which means that over a few days, you might end up with plus or minus the stated leverage amount, which just gets really confusing for people. So when you do that, it just means that returns over time will almost certainly deviate from the linear 2x return. So, for example, if over a given month, for example, the underlying stock went up by 10%, 2 times on 10% was 20%, the leveraged ETF equivalent will almost certainly not be 20%. It will be
Right.
plus or minus. And
Right.
then the theory being that because you do that every day, you're rebalancing, you get what we call path dependency. And so the longer you hold it, the theory being that the potential for sort of drift against that underlying is greater over time. So sometimes that's not the case.
Yeah, because I've had some of the audience has said like that NVDL is basically a bit behind NVIDIA, which I have on the chart here for the last, like year to date, basically.
Yeah, and if you go out for 3 years, whatever, it will be significantly
Way,
higher.
way higher, right? Yeah.
It's very, very dependent on what time period you look at.
Hmm.
And over the long run, the performance NVDL is up over 2,000% or something.
Yeah.
But yeah, if you cherry pick dates, it will be plus or minus whatever the return is. And obviously, this year, like all stocks, there was a big drawdown in the first few months of the year, and obviously, if you
Right.
double leveraged into that drawdown, then there's a big move down. Then it takes time to catch up and then regain the all-time high, which NVDL did a couple of times this year in the
Right.
last. Yeah.
It seems like it's done a really good job actually capturing the upside, and it's not too bad in terms of like the downside. Um,
Well, it
yeah.
just all it does is just replicate the 2 times daily return. And Nvidia is a stock that it's probably had more up days and down days, obviously. So
Yeah.
it's been in a very strong upward trend, and that's really where these products can shine.
Right.
If you look at a stock that's clearly on a downward trend, then that's where leverage single stock will lose more clearly. Or if it's just a directionless trend, it's up and down, up and down, up and down, a similar thing. But what these products really like is they like a strong trend. So obviously, if you're long, you want a stock that's going up in a strong trend, and if you're short, you want a stock that's going down in a strong trend.
Yeah. So then when it's on a strong bullish trend, it's basically with the compounding of the daily
That's exactly
2x
right.
of the returns. Yeah, it's going to keep running. Makes sense.
Yeah, and there you're more likely to actually outperform the 2x linear return because of the compounding, the reinvesting of the profits from that trading day, and then applying two times leverage on the performance of the stock plus the reinvesting of the flows. So it creates a compounding effect, which is very powerful over long bullish runs.
Yes. Yeah, I see that here. Yeah, because 2024 was mostly bullish, and then especially the second half of it. And
Yep.
then since like May, yeah, it's been doing pretty good, outpacing it.
Yep.
All right, so back to so your dividend objective for most of the yield boost is what exactly again?
So we pay weekly distributions,
Yes.
and there's no sort of stated objective. In other words, we're not trying to target a certain yield,
Hmm.
but we're just paying the majority of that distribution out when we receive it from selling the option. Obviously, we have to buy the put options, but it's the net dividend or net distribution from the money received when we sell that put or sell those put options.
Yeah.
And those distributions are, as you know already, they're, if not the highest in the market, they're certainly among the highest.
Oh, for sure. Yeah, your first couple of months, it was like over 250 for TSYY.
Yeah. And that's because you're getting 2 times the income of an
Hmm.
unleveraged underlying. So you sell an option on Tesla, you get implied volatility of whatever it may be in the market today, 70. You sell the same option on 2 times Tesla ETF, and it's double that. So that's why YieldBoost is able to pay such high yields, is because when you sell an option on an underlying levered ETF, there's 2 times the notional premium available for distribution,
Yeah.
or 3 times if it's an index based, which is YSPY and TQQY.
Oh, right. Yeah, 3 times. Yeah, you're right. For those ProShares ones.
Yep.
So tell me about the decision to switch to weekly. It looks like that happened in June.
Yeah.
Yeah.
Well, thank you to you guys. I mean, look, that's
Yeah.
a great example of where we we try and build the best products we can, but at the end of the day, we don't have a monopoly on all the good ideas,
Hmm.
and that's where feedback from the community can really help, and people exercised a strong preference for weekly distributions. And so for us, it kind of made sense because we were, trading weekly options anyway. So it was easy to synchronize the selling of the options with a weekly distribution. And we switched to weekly, and no regrets.
Yeah. That's interesting. It's actually easier for you to synchronize since you're doing them weekly.
Yeah.
Yeah. And so far, I'm seeing it stayed pretty much consistently in the 20-cent range for the TSYY.
Yeah, the Tesla volatility, I mean, again, that's all about the Tesla volatility. And
Hmm.
so there'll be periods of time when volatility is higher, lower, but for the most part, I think that volatility has been fairly stable.
Hmm. Now, when do you expect dividends for the newest ones for the MSTR and the Palantir one?
So we just launched those on Tuesday. So the first will be, I guess, maybe Tuesday next week.
Okay. Awesome. Yeah, that's really quick.
Yeah, I mean they're on the weekly cycle, so just be like you get a couple of days less, I guess, in the week. But typically we sell or trade options on the Friday and then pay
Hmm.
the distribution on the Tuesday. So there should be something there this week.
Oh, it looks like there's actually on the site already.
Yeah, you should have a table.
Yeah, 46 cents.
Yeah.
Uh-huh.
Yes.
Awesome.
Here we go.
Yeah, awesome. Yeah, there's the weekly, yeah, October 3rd. Yeah, each week for the rest of the year. Great.
MSTR,
Yeah.
LTR.
And so some feedback here. So Dividend Degenerate says weekly was the best decision. And here's this question again. I know you're probably tired of seeing this question over and over again, but how is NAV erosion? And I know that's not the proper phrase for it, but how is it being
Yeah.
managed?
Well, like we say, I mean, the objective of the distribution is you sell an option and you get a premium for selling that option and you pay that premium out. Now, we can manage that strike in terms of we can sell an option that's at the money, we can sell an option that's slightly in the money, and we can sell an option that's out of the money. And that's the way that we try and manage the yield or be able to pay that out. Similarly with puts, we typically we buy puts, that are slightly out of the money. But again, there's ways we can manage it. It's just always about the risk return, and the vast majority of what people refer to when they're talking about NAV erosion is just the underlying going down. So that's the same with any stock portfolio. There's nothing you can do if the price of Tesla goes down. I mean, I'm not sure what you can do about that, but
True.
Just a question of being able to manage those distributions. And then for people that want to keep up with that, one way to avoid it clearly is just to reinvest your distribution. And by reinvesting, you keep up with what the fund is doing. Just do exactly what the fund is doing. And when the underlying goes down, as you'll see, that typically volume increases because at some point people say, well, actually, it's a better entry point or it's a good entry point. And I'm a long-term investor, so I'm buying, I'm averaging in regardless of price. So some days I'm going to be buying at a higher price. Some days I'm going to be buying a lower price. But my average is there, and my objective is to collect, the large weekly distributions.
Mm-hmm. This person said, and this is actually a phrase that another fund manager used, it's not NAV erosion, it's relative beta.
Yeah, exactly. I mean, I think what most people, again, NAV erosion is kind of a phrase that, some people concoct that are trying to sell competing products. But again, I'm not exactly sure what they mean by that, other than the value of the portfolio went down, which nine times out of 10 cases, that's because the underlying went down.
Right. We had another comment say we should change YieldBoost to YieldBeast.
Nice. I like it.
Yeah. And he says TSYY is his biggest holding.
Yeah.
He also agrees that 2X are great for the wheel strategy. So let's talk more about that. So would you consider it risky if someone puts 2/3 of their net worth into wheeling 2X ETFs on the options wheel strategy?
Well, we don't offer something like that.
I just mean if they do it themselves. That's what I'm doing. That's why I asked.
Oh, okay.
Yeah.
Sorry.
Yeah.
Okay. Again, it's tough for me to say objectively. I get asked questions like this all the time. Like, is something risky, or is something? It's always difficult to answer that question without knowing clearly the full picture of what someone's investment objective is.
Mm-hmm.
For some people it will be risky, for others it won't. It's just ultimately what you're comfortable with and how you sleep at night and what your objective is. I mean, increasingly I'm getting a lot of feedback from people that are saying, I was trying to ask, why do people buy our funds? I'm talking about YieldBoost.
Yeah.
And increasingly, I'm becoming aware of this phenomenon where people are saying, you know what, like investors or people in North America have only one source of income, and that's their job.
Yes.
And people are way too reliant on this one source of income. So everyone thinks that their job is guaranteed until it's not. So then what do you do? And, people have liabilities, etc. And a lot of the customers we're talking to say, well, the really important thing to do is to create an additional source of income. Like, you have to have another source of income that's not your job. And it has to be a dependable source of income that's not your job. And I think when you put it like that, you get away from a lot of these, technical things that people write about in blogs, and you get to the heart of the matter, which is, this is not, there's a place in life for peace of mind, and peace of mind in this context is about that income stream that is not your job. Then, in other parts of your life, if you're investing portfolio, etc., you can focus on other things. Like, you can focus on growth, or you can focus on whatever you want to.
Hmm.
But increasingly, a lot of people, come to us saying that's what we're trying to do. We're trying to create a dependable source of income that's outside of my primary source of income, which is my job. And I think
Yeah.
that's an interesting concept.
Oh, 100%. Yeah. I mean, and I can speak to this directly because this strategy this year has gone so well. I did it in a second account, and producing a full-time income just doing this strategy,
Yeah,
it's very, very freeing. It's amazing.
absolutely. And
Yeah.
then it gives you time and gives you peace of mind. And at the end of the day, what's better than that?
Hmm. But yeah, I ask because I actually have, I'm at almost 8,200 followers, and they kind of like to follow what I do. So if
Yeah.
I'm leading people into something like this, I just was kind of wondering your thoughts. Um, but yeah, I mean, it
Yeah. At
works
the end of
as
the
long
day,
as we're, yeah,
I mean, at the end of the day, it doesn't really matter what I think. It's
yeah.
what you all think, and
Oh yeah.
what works for you.
Hmm. Well, and in a bull market, it works. It's just the risk of the market dropping.
Well, look, there's always the risk of market dropping, but then
Yeah.
it depends again what your goal is. If your goal is consistent income, then that is something that in many ways is better served through these ETFs, whereby you're trying to profit from volatility. That's the basic idea, as opposed to um, being long the market or short the market and trying to time it.
Hmm. Yeah, 100%. Okay, someone said, yeah, 99% yield for PLYY, 98% for MTYY. Um, Here's a question. Any plans for yield boost funds beyond popular overweight stocks? Oh, this is a good one. Like energy, healthcare, any consumer staples.
Yes,
Yeah.
we have a bunch of those that are already registered, and I think in some respects, YSpy and TQQY were the first experiments with that. Now they have been less popular, and I think that's partly because the yields on the individual underlyings are so high that if I'm saying a yield, an analyzed yield on YSpy or TQQY is around 50%, and you look at annualized yield at 150% for a single underlying, it may feel like it's not exciting enough. But compared to a traditional covered call on the S&P or on the Nasdaq, that's still a massive increase. So I think those funds will get a bit more popular, but with that, there'll be room for more sectors, things like that we can bring out.
And that's a perfect segue into the next one. So most high yield investors and they like multi-sector exposure. So will you offer broader baskets soon?
In the works. I always
Awesome.
said that I think the challenges that we deal with regulations that specifically call for diversification requirements.
Yeah.
And up until this point, we'd been really we started off with one fund with TSYY, and then we went to 5 funds and 6 funds. Now we're at 10. So with Amy and AZ and with MTYY and PLYY, that's now 10. So we're finally at a stage where we have enough funds to begin that process. And so watch the space in terms of a yield boost, fund of funds, etc.
Okay. Awesome. So by the end of the year, we're probably looking at seeing even more funds.
Oh, definitely. We're now with the second registration, done. We're able to launch more, and it's really just a question of managing the bandwidth, frankly, on our end from a
Hmm.
portfolio management perspective, making sure that we can raise the seed capital, get the lead market making done, get everything pushed out to the market. But we're doing about 2 funds a week so far, which is massive for a small company like us.
My camera cut.
Oh, you disappeared. Now you're back.
Put up a question and then just have you answer it.
Yeah, go for it. Soon, as soon as I can, I will come back on and give you more information about this. But definitely list on our priority. We hear it loud and clear. We're trying to do that as soon as we can.
Sorry about that. I don't know what happened. Sorry. Okay, we're back now. So thank you for answering that one. Can you hear me okay?
Yeah, loud and clear.
Great, great. Yeah, my camera just cut out. Okay, let's see. So Roundhill, another one of our favorite
Yep.
competitors. Roundhill has WPay. YieldMax has YMax, YMag, and a group of ETFs. Any plans like that for anything like that from GraniteShares?
Yep, it's the same question. Yes, the short answer, like I said, we just had to get to a critical mass of funds, which we've been working to do. Now that we've got that critical mass of funds in place, the first step. So the second step is now we can move to do these kind of strategies.
Awesome. Yeah, that makes sense. Okay, let's see. PTIR he's just giving feedback. PTIR has been amazing. 2x for Palantir.
Yep, Palantir. Wow, what a company! What a performance!
Amazing. It's amazing. Yeah. He's saying your company won't be small. I don't think you're small. I think you're growing, but he's saying you're going to continue. To
I'm trying to be humble. We're 11 billion. Everything's relative, but it's small compared to BlackRock, but it's big in an absolute sense.
Right. Now here's a question. This is I don't know if you've been asked this one before or not, but as a U.S. investor, I find it annoying that, we at first launched 3x leveraged ETFs. Now our own regulations don't allow us to do that. And typically, in Europe, there's like even more regulations on stuff. So I'm wondering your thoughts on how we can have like 3x and 5x in Europe, but not in the U.S.
It's a complicated question with a complicated answer. And it all kind of goes back, at least as far as the US is concerned, to like historic quirks in the system, which are kind of getting ironed out over time. But there's some sort of historic quirks here. In Europe, there's no historic quirks. So it's just much more what the regulation is. And there you can have a 3 times, you can have a 5 times on an index. So there's just more flexibility, if you want to call it that, to do more products. I think the European regulators are typically more comfortable with leverage and derivative-based strategies. But what I'll say is, and I can't give any promises, but in my experience, the regulation always evolves. So things that people thought were impossible a few years ago now are possible. And that sort of just constantly is the position over time. So it wouldn't surprise me if we went to a world where we had a higher leverage amount in the US at some point soon.
It makes sense because we used to launch 3x funds.
Yeah, exactly.
Yeah.
There's precedent, and there's also precedent in the structured product market and some other areas of the market where you can even get 4 times. But it's just all these things take a bit of time. Evolution, not evolution.
Yeah. This might be a basic question, but like, how would an investor in the US, if they wanted to invest in those higher leveraged funds, I mean, aside from buying YieldBoost products, like if they want a direct exposure, how would they go about that?
Well, typically the way that self-directed investing works is that providing your broker has access to whatever that exchange is, and it's obviously the way that you buy, like for example, shares in a Japanese company on a Japanese exchange.
Yeah.
It's a similar concept with ETFs, where you have ETFs trading on exchanges all around the world. And from a self-directed perspective, if you wanted to buy an ETF on another exchange, as long as your broker gives you access to it, it'd be no different to buying, a share of a UK company or a Japanese company or whatever on that local exchange.
Right. Good to know. All right, last question. Is there any scenario where your strategy would forego buying a put alongside your put sell, such as a clear bull run?
That's a good question. I guess it's always impossible to predict the future, and I suppose the idea behind it is more to capture that spread. And clearly, if we knew that there was going to be a bull run, that would be fine. But I don't think you give up that much because the premiums are so high from buying the insurance or buying the downside protection. And I think to the extent that the market reverses or something happens, and it can happen so quickly, the benefit to having it is there, or there's more benefit to having it than not over time. And there's always be occasions when you could cherry pick, but I think, the consistency around what we do, it's better to have some downside protection than not. And I think we've seen that with the covered call strategies out there that don't have downside protection, that it's a feature that people really, really value for YieldBoost.
Yeah, for sure. Now, and then I know you can't give exact dates, but like ballparkish, do you think next few months for new funds?
Well, I definitely can't give exact dates
Yeah.
because a lot of things that go into it, and obviously there are no dates sort of cemented. But we want to try and get as much as we can do before the end of the year. So something that we'd try and work on, and as soon as we have an update, we'll let you know.
Sounds good. All right. Well, I think that about wraps up the questions we have. Thank you for coming on.
Yeah.
And for the audience, thank you all. Any last, I guess, comments before we end it?
Just in case, if anyone's got any questions, of course, and if this sort of doesn't make sense, always feel free to reach out to us directly, depending on whatever you prefer, whether you'd like to chat online or send us an email or call. We're always available for that, and something we encourage, like hearing feedback from people. And hopefully people follow us on LinkedIn, on X, actually the X account, whether it's the YieldBoost account directly or it's the GraniteShares account, is probably the best way to get the weekly distribution information. So if you're not following that, please follow that. And look forward to speaking to you soon.
That's interesting. Let me put that up so they can see, because I think other YouTubers are trying to do their own like sites and stuff. I don't know if you encourage that or not, but yeah, here it is, right? Your own X account.
So the YieldBoost one, and then the GraniteShares. Well, the GraniteShares one is more than YieldBoost. That's obviously the difference. And YieldBoost is just YieldBoost. So
that's your sub segment, the sub product. Yeah, because you've got the your main like leverage ETFs and then YieldBoost.
Yeah, and all sorts of other stuff.
Yeah. Mm-hmm. All right. Well, great. Thanks for coming on. Stay on with me for like a minute or so. But I'm going to go ahead and end it. To the audience, thank you all so much for tuning in. Please remember to like, comment, and subscribe. Join Discord. Check out GraniteShares website and their X page and all of that. And we will see you all soon. Take care. Have a great evening. Bye. All right. Stay just a second. Here we go. All right. End stream.